So we've seen a sharp spike in volatility, at least here in the U.S. The VIX kind of closed at about 15 last week. This morning it's sitting at 20. How do you think that impacts the market action beyond what we've already seen so far when it comes to futures?
Yeah, it's clear that the latest escalation around the trade conversation between Europe and the United States around Greenland is infusing a new uncertainty into the market conversation. I think many of us started the year thinking that the trade issue is kind of winding down. And here we are again with that sort of uncertainty opening back up.
All right, with that uncertainty opening back up, one thing is clear, that bond investors are reacting to this news. The president's plans to hopefully, I guess he hopes, to take over Greenland. The spike in bond yields, that seems also very notable it's not only just the issue of the bond yields going higher, but the potential impact on the equity markets. Do you see it that same way as well?
Yeah, I think it's generally just introducing more uncertainty. And I think what you're seeing in the bond yield is that some risk premium is being baked in now in terms of the long-term yields of the 10-year to 30-year. We've also seen similar increases in yields back in April at the height of the trade volatility. So I think you're looking at investors looking for diversification as this trade uncertainty is flaring back up.
All right. Are 10 basis points, we're looking at the 30-year, is that very meaningful when we're talking about possible competition with the equity market? Is that a sign of concern that we may see more and more investors go to the 30? Also, the similar move when we're talking about the 10-year, that big jump up?
I think it's not a massive increase yet. Certainly, these are any sort of basis point there in the long end that can have an impact. But if you look at equity markets, if you look at fixed income markets, it's an initial response by the market. I think investors will be looking at the next a couple of days as President Trump is in Davos and see how committed he is to following through with those tariff threats. And I think markets will adjust on the basis of that news flow.
All right. So with all this going on, you're looking for companies that have a wide moat, and you see a lot of those companies are trading at a discount. Are there certain sectors that you're looking at where you're seeing a discount when it comes to wide moat companies that it sounds like you think may be less impacted by some of this volatility?
Yeah, we've come really from a period where risk assets have done phenomenally well. If you look at the last 3 years, the S&P 500 gained 23% annualized. And we think that looking at quality stocks at this point in the cycle can be attractive, whether it's healthcare, whether it's parts within consumer defensive or even industrials. So looking at companies that have strong franchises and have the ability to grow and reinvest earnings at high margins.